Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right. Monday, Christmas week.
Christmas week. Absolutely. So looking forward to taking a little time off and enjoying the family. This is what we do it all for, right?
Isn't it the truth? Isn't it the truth? So we got a lot to cover though today because there's a lot of things happening. So we've seen interest rates improving in the market. The bond market's really liked what's happening with interest rates. Typically we see them get worse after a Fed cut. It worked the right way this time. I think that there's a lot of great consumer confidence right now. And I think that the first quarter of 2026, even though some people on the right are saying it's going to be a great year, I think it's going to be a better year. I'm not going to say it's going to be a great year. I think it's going to be a little better. And you know what? I'm okay with a little better.
I'm okay
We
with a
don't
little
we
bit as
don't
well.
need to go. We don't need to go from down here all the way up to here. Let's just bring the ladder, bring it up, gradually come up.
Yep.
But one of the things I wanted to talk to you about, because it's a hot topic right now, and that is the elimination of property taxes in the state of Florida proposed by Governor DeSantis. Now, I thought this was going to be on primary residences to get things started. Tell me a little bit more about what's going on.
Yeah. So on the 17th, which I think was Wednesday last week, Ryan Chamberlain, because remember, DeSantis can't initiate legislation. It has to be a
Right.
rep. So Ryan Chamberlain took the reins on this and submitted a proposal. I don't have the HJR numbers in front of me, but he submitted two proposals that will alter property taxes, well, eliminate property, alter everything forever if they pass, right? So it's a two-part proposal, and I haven't figured out why it has to be two-part, but it apparently does. One of them raises the sales tax from 6% to 9%, right? So that's the state portion. I know some counties have an extra percent or whatever, but the state portion is 6% and it would go to 9. Okay. And also, this is the one that I think is super controversial and hard to get my head around being happy about, but there's a 5% exit fee on selling a home. So you can consider that a sales tax on selling your home, if you will, but they're calling it a transfer fee or an exit tax. Okay. So on a $500,000 home, you pay 25 grand to the state. That sounds horrible, but in exchange for that, no property taxes at all.
So let's just break that down then. So if you've had a house for 5 years and you paid $5,000 a year in taxes, it was a wash for you. You didn't pay anything. You paid your 5% when you sold. If you had a house for 2 years, that's going to be an expensive proposition. What about investors that are fixing houses up and flipping them? How's that going to affect them?
Yeah, I don't think the legislators have talked about that at all or thought about that at all. And it's hard enough being a flipper these days trying to make a buck, because with housing prices as high as they are and people wanting to get the most they can for the house and having been getting it, the number of flips available is really down.
Yes.
And the margins are thin. Margins now, people are generally making $10,000 to $15,000 full on a flip. Right. And so if you got to pay a $25,000 exit fee on top of that,
you're not going to do it.
You're writing checks. You're writing checks to sell houses. You're done. You're out of business.
Okay. And you know what I like about this whole topic is that there are some pros and there are some cons. There's some answers and then there's some unanswered questions as well. And one of those would be, hey, I'm not interested in flipping houses anymore. So now the guy that needs to sell the house that should be flipped, that could be transformed into a beautiful home for a first-time family or whatever, no longer makes it worthwhile to do that.
Yeah. And it's interesting. There's always a lot of sausage making that's going to happen between now and March 13th, when the select committee is done figuring out what they want to actually put on the ballot, because these are just proposals. These are not officially going to the ballot yet. Right. So a lot can change between now and then. And I'm encouraging everybody. I'm doing a series of videos on this topic. The next one comes out on next Sunday on the 28th.
Yeah.
So stay tuned for that.
So I'm really curious, because these are things you don't know whether they're good, bad, or indifferent until you put a pen to it, right? So when you're looking at different income or status brackets. Say we start with the first time home buyer that's a $400,000 house or less, right?
Sure. Mhm.
So you're saving money on your property taxes. I get
Yep.
it. You,
Yep.
you could potentially, if it passes, you could pay a 5% exit fee. So if your taxes are 5 grand a year and you keep the house for 5 years, it's a wash. If you keep it for 6 years, you're ahead of the game. You keep it
That's
for
right.
longer, you're even ahead of the game. Okay. Now,
So the good news is that encourages long-term home ownership, right?
it does. It does. But now I look at, okay, the goods and services that I purchase, now I'm going from paying 6% to paying 9 to 10%.
Mhm.
So now that's an extra fee. So I don't know what the average family that
Sure.
makes $100,000 spends on taxable goods, because you'd have to ad nauseum that down to that fact and
Yeah.
then
So
figure
obviously
out.
I did the math on that. And I use 90 grand as a number, so you can adjust a little bit if you want to. And obviously I'm just using averages, but I did do some research and figure it out. And on average, a family that makes 90 grand, they're going to bring home about 72 after taxes, right? Income taxes in Florida. And then they're going to spend about $27,000 a year on taxable goods, right? Because
Okay.
a lot of what they spend is not taxable. So about $27,000 a year is what people spend on
So
taxable.
that's
And so
2,700 bucks if we're at, or call it.
it's an $810 difference between what they spend in sales tax today and what they would spend in sales tax tomorrow. But if they're saving 5 grand a year, it's a good deal for them, right?
Could
Now,
be.
all of that assumes, as you said, they got to hold on to that house for 5 years or more, and then the real benefit starts coming in. I also did the numbers on a renter. They're unfortunately they're getting crushed on this, right?
They're getting crushed if they continue to be a renter.
If they continue to be a renter, right? I'm not changing their status, right? So if they're going to continue to rent for whatever period of time it is, again, on average, assuming they're lower income, they're not making as much as 90 grand, it's going to cost them about $540 a year
Right.
in extra money. However, and this is a big if, right? Their landlord is no longer going to be paying property tax on their rental property at all, zero, right?
Right.
So does the landlord pass that on to the tenant? Probably not right away. I know I won't, right? However, we're already starting to see landlords lowering rents. We're starting to see apartment complexes give away multiple months of incentive free rent, right? Just to get people in because there's more supply now of rentals. So as that pressure comes down, at least I don't think we'll see increases in rent, and I think we'll see some decreases
I
in
think
rent.
we will too. I would certainly adjust my rents to accommodate it if it's saving
So,
me money. But I
so
also
it'll
have to,
probably take two,
but
three,
I
four
also
years
have
to
to,
filter through.
but listen, any intelligent person or any intelligent business person, particularly if in the property management or homeowner business,
Mhm.
you have to account for, now I'm going to pay 5% when I sell this thing.
That's
So I
right.
need to bank a little bit more money
Right.
now so that I've got it when I go to sell it.
100%. You're spot on. So you have to think through all the mechanisms that are going to be impacted by this, right? But think about your businesses. You got a business, right, that's paying rent to a landlord. That landlord is no longer paying property taxes either, right? If you're on a triple net lease where as the tenant, you're paying property taxes, that literally just goes away for you.
Sure it
Right.
does.
That's the tenant gets a direct impact on that. So are businesses going to be more able to either increase their profits a little bit, share more with their employees? Or are they going to be able to cut costs to the consumer? All that comes into
Well,
play
I
too.
can tell you one thing. As a landlord, my brain would lead me in the direction that I need to create some type of a escrow type account, that I've got that money set aside for when I do sell it, so that
Sure.
I've already made up that and then start making adjustments to rent. But
Sure.
I can
Sure.
tell you, the flippers concern me. And we
Yep.
need flippers. Flippers are important in our home ownership. You got these
Absolutely.
houses that are sitting there that can't be lived in or nobody wants to buy. We need people to go in and invest in those and make those repairs so that
I know.
house is livable, right? So
Yeah, I know a lot of people give flippers a bad name and sometimes they deserve it. But any property that I've ever flipped, and I've probably flipped 100, 120 properties in the last decade. And when I flip a property in general, I'm spending 30, $40,000 improving a property.
and you just paid taxes at 10% on that money too.
Right. And I'm going to pay taxes on that money. Right. So when I improve a property, I take something that can only be bought cash, right? Can't be bought with a traditional loan.
Right.
And I fix it up and I make it livable for a family,
Right.
and 99% of the flips that I've ever done have been sold to a family that's going to live in it as opposed to
That's the what we want to do. That's what we're here to do, is to create home ownership for people that otherwise may not have had it, and to take a blighted home and make it something that's beautiful. It improves everything. And now, normally I would say now you have somebody paying property taxes, but you're not going to have anybody paying property taxes.
Now, let me throw something else at you that we haven't even discussed yet, because you being the mortgage guy, how many times do you, when you're calculating somebody's mortgage payment, is it something like taxes or insurance that actually makes the property unaffordable for them?
Well, I can tell you this much. Debt ratio is a primary concern when it comes to home ownership. And with affordability being a challenge today, it could be literally $10 that brings somebody over that threshold and disqualifies them. And
Yeah.
we see that all the time on taxes, homeowners insurance, HOA fees, any kind of thing that could prohibit them from getting to that level that they want. You eliminate a $5,000 tax bill,
That's
that's going
almost
to
$500 a month, right? That's like 450 something, or I can't do math in my
most
head.
certainly is. But I can tell you this, on our next segment, I also want to talk to you a little bit about homeowners insurance. We don't have time to cover it here, but
I'll
stay
cover it next.
tuned, because I want to cover homeowners insurance, because there's been a lot of changes to that. And I think people need to know. So we can eliminate the taxes, we reduce homeowners insurance, and interest rates come down. We could be back in business and the world is happy again.
Yeah, yeah. So I think it's going to improve, potentially, if it all passes like it is. It'll improve affordability. It will create a bit of a lock-in effect. I think here's the real funny thing. I thought this through partially, not fully. But if this passes November 3rd, it'll be November 3rd, 2026, and it will take effect January 1st, 2027. You'll have that month and a half period where there's going to be a lot of investors that are going to dump houses because they were thinking about selling them. And if they wait just an extra couple of days, it's going to cost them 5% of the value of the house.
That's right. I wait to be seen. It waits to be seen whether that actually happens, because I know that 5% is not going to sit well with a lot of people. And I can tell you this much: what happened to taxing the tourism? Why couldn't we maybe do a 2% tax on the exit of the house and a 2% for tourism? And let's build it up somewhere else where it's not quite as dangerous.
Yeah, let's see if we can, we'll keep an eye on it, right? So I'm committed. I've been following this. I've been doing updates every month on my channel. Stay tuned, keep
We'll
informed.
post it below here. Thanks for joining us. Have a great Monday. Appreciate it. Merry Christmas. Happy Hanukkah. Whatever it is you celebrate, we bless you all. Have a great weekend with the family. See you, Tom.
See you, Bruce.